Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I'm your host, Ashutosh Garg, and today I'm delighted to welcome a very senior and accomplished professional from the world of sustainable finance from the Amsterdam in the Netherlands, Mr. Robert Rubinstein.
Good
Robert,
morning. Thank you very much for this kind invitation.
thank you. Robert is the founder and chairman of the TBLI group. So, Robert, before we talk sustainable finance, a few questions for you.
Sure.
Tell me about your journey and what sparked your interest in sustainable finance.
Oh, okay. Well, I was always, I guess from my parents, I was very always focused in purpose, values, ethics, doing the correct thing. I had left the United States just to go traveling and did a lot of different things. And I had published several magazines, a bicycle magazine that was a financial and spiritual success, and the other two magazines were just spiritual successes and financial disasters. And
Mm,
while I was in the middle of that, I heard of an organization called the Social Venture Network because I felt very frustrated with what I was doing with the second magazine.
mhm,
And then I saw, wow, there's a whole organization that actually focus on profits with principles.
mhm,
So I learned, I joined and spent some time there. I hosted them at our office. And that gave me the idea that I need to create a magazine around profits and principles, which was
mhm,
95. Um, and that was basically to show the business sector that they can be successful at the same time of focusing on restoring the social and environmental balance. And
mm,
that led to ultimately TBLI.
mm.
And I found that was really my big purpose because the business community is essential if you want to restore the social environmental balance, but they'll only respond to pain. So I looked at how could I increase their pain levels that they would embrace a different direction
Mm,
and show them that if they want, they can have financial return and a social and environmental added value. So that was
mm.
basically
Amazing.
the journey. And I didn't really find it that difficult because if you ask anyone, do you want a financial return with a social environmental added value? No one will say, no, I really want to make life miserable for everyone, and I'm working at that
Yeah,
24/7.
yeah, yeah. Well said.
Um,
Well
so,
said. What a journey. Thank you.
mhm,
But Robert, for my viewers and listeners, help us understand what is the meaning of sustainable finance
mhm.
beyond just common definitions.
Oh, okay. Well, I mean, there's a lot of attempts to measure that, of measuring what is the social and environmental restoration, as well as creating a financial return. Traditionally, most investment only looked at financial return.
Mm,
Two, very good examples is drug smuggling, weapon smuggling, child trafficking, all very profitable,
mm,
but it's not something that I think most of your listeners would want to
correct.
support. On the other side, many companies were making money by increasing the challenges of climate by producing far more CO2, whether the energy sector or the agriculture sector.
Mm,
So many were actually not calculating their full footprint. I think the probably one of the best examples, which makes it easy for everyone to understand, is bicycles.
mhm,
If you buy a bicycle in Europe, there's about 20 to 25% VAT.
mhm,
You buy an airline ticket, there's no VAT,
mm,
zero
mm.
worldwide. So it becomes very challenging for investors and people. How do I measure
Mm,
my social environmental balance when products don't reflect their true cost
mm,
at all? And
mm.
that's been actually the challenge. But I mean, there are lots of attempts. We've
Yeah.
created an open source database, but if you want to have a financial return, and a improved social environmental balance. You can do that if you want to, but you have to decide what is important to you.
Mm,
Maybe you don't care. Before, weapons investing was not a very good decision for ESG investors, environmental social governance or
mm,
SRI.
mm, mm,
Now, lots of money going into weapons because of fear of war with Russia
mm,
or with China. So things change. It's very much a personal decision. But if you want to have a financial return, and also try to improve, address climate change or food insecurity
mm,
or education, you can if you want to. If your main goal is only financial return and you don't look at any of those things,
mm,
that's also fine. It's your money. But I
mm.
think more and more people realize the power of investment and the power of money in trying to restore the social environmental
Great
balance.
response. Great response. And Robert, based on all your vast experience, what are some of the biggest misconceptions about ESG and impact investing?
It's most think it's a philanthropy.
Yeah.
It's a kind of it's an ethical issue. It's
Mm,
not professional. They're bad investments. There's no good deals. The people who manage not true at all
hmm
because um, you can say the same thing about traditional financial investments.
mm,
Um, Everyone would say that ESG and SRI is just bad investment. They don't know
mm,
what they're doing, etc. But no one ever questioned when we had the enormous financial disaster
mm,
that nearly collapsed the whole financial system. No one asked, well, does this CDO, these collateralized debt obligations, do they actually are they safe? Are they reasonable? That every piled in on that, and there was no research showing that how bad it was.
mm,
And even if it was, nobody read it, and everybody just poured in on that.
mm,
So this, we've had everyone says sustainability is not good, unprofessional, but we've had Parmalat, Enron, WorldCom, Madoff, all of
mm,
these financial frauds, and everyone seems to accept that. I think we
mm.
need to be more critical of the financial sector.
Yeah.
Most are overpaid by a factor of four and
Mhm.
underperform. They're not very clever, even though they try to be. And most of the time, they're wrong. But very few people confront that. They're willing to do that. And I think the best example of the failures of financial sector, remember when the financial sector collapsed? There were hundreds of thousands of people fired.
Mm.
I don't know if you remember
Yeah,
that
yeah, I
period.
remember that.
So, did the financial sector get smaller? No, it
No.
got bigger.
Mm,
How do you fire hundreds of thousands of people and your industry gets bigger? That means those people never created any value. And
mm,
that's really my critique of the traditional financial sector is that
mm,
um, they're they only follow a certain path that they know. Most of them are used car salesmen with a Rolodex,
mhm.
not very clever, and not enough people are willing to confront them and tell them that their children are ugly or what they're
Very
doing is not
interesting.
really that
Very
great.
interesting. Thank you. And my next question is that how do you ensure that ESG efforts are not just marketing or greenwashing? And
Mhm.
you've given me a bit of an answer in a few minutes back.
Well, that's the $64,000 question.
Yeah.
Every time we did our conference and we would do 40 international summits, we were the first to do ESG international summits on that.
Mm,
And I would invite all of the leading ESG rating agents to come on a panel, and they always refused to be on the same panel.
mhm,
They said, no, no, don't put me over the competitor. So a year and a half ago, we launched the first open source database, which allowed everyone to compare the various systems. We had 44 independent presentations of that to be able to prevent the
mm,
greenwashing and allow people to compare.
mm,
What was interesting is that the extremely well-funded organizations, the
mm,
Global Reporting Initiative, the PRI, Principal Responsible Investing, Carbon Disclosure Project, MSCI, Sustainalytics, WorldCom, Benchmark. It's all of them. They all refuse to participate, all
Mm-hmm.
of them.
Mm,
So you can basically avoid that if you start looking at things because most of the sustainability analysis is not about outcome, it's about process.
mm,
And they're not looking, am I really
mm,
reducing CO2 emissions? The best example is the climate tech industry that raised 80 billion euro or dollars
mm-hmm.
in investment, but none of them are impacting climate in the short term.
Right.
Zero, zero. But
Mm,
they'll do IPOs and they'll do 10x. And that's really the issue for the individuals. You have to be critical about what the claims are being made.
mm,
And very few people, everybody think, oh, I don't know enough. I can't really, I have a feeling about it, but I don't know enough. The
mm.
finance people, they're so smart. They know everything. Yeah, right.
Well said. Well said. But in your opinion, what are some of the key obstacles that prevent ESG integration at scale in major financial institutions?
A lack of commitment by the financial sector,
Uh-huh.
mainly. I was always asked, come give a talk to the C-suite managers, with a global conference call. And
Mm,
then I realized that all they wanted to do was to learn tricks to fool
mm.
their clients that they were an expert.
Right.
Why is it that everyone in the financial sector and private banks keep talking about next gen inheriting all these trillions of dollars and they're very interested in ESG. Why is it none of them dominate the ESG or impact space? None
Mm,
of them.
mhm,
That's mainly because none of them are allocating the resources to
mm,
educate internally or externally. It's always been about education.
mm.
That's really all it is.
Yeah.
And the challenge is access. If you have access to the actual asset owner,
Mhm,
it's very easy to convince them.
mm,
But they're quite isolated. Jeff Bezos doesn't have a sign on his house. Hi, I have billions, come visit me. So
mm,
that's the challenge. The wealth managers have these relationships, but they're afraid of the client losing money.
mm,
Um, and most of the big firms do not allocate the resources to educate internally or externally, which is why it's taken so long. It's
mm.
not, I mean, it's very easy to
Yeah.
do
Yeah.
if you want to do it. It's just very hard to do if you don't want to do it.
Mm. Great response. Robert, how has the rise of AI and data analytics changed how impact is measured when it comes to such investments?
Well, I think that there will be that's a new frontier now. There will be it'll be less expensive in analyzing that. There have been improvements in reporting, but the focus has always been more about outcome sorry, about process rather than outcome.
Hmm.
People were not really looking at are these big listed companies actually restoring or improving the social environmental balance because most of them have something called stranded assets.
Hmm.
There's technology that has a fraction of the CO2 emissions, water, etc. But these big companies have invested in all of these industry infrastructure. They're not willing to change that. I think with time, AI will help quite a lot because most people don't use the bank, all their services. They use it for cash management, transferring money on your phone. And the AI apps will be able to allow you to select the investments and the criteria according to your particular needs if you're able to capture that information. But with AI's ability to capture all of the data, I think it's going to be a tough time for the banks because they don't really give any special value.
Mm.
It can create a lot more money going into that. But unfortunately, the most interesting companies that truly work at restoring the social environmental balance are often non-listed companies.
Hmm.
And that because of regulation, I don't know about India, but in many places, you cannot invest as a retail investor in
Mm.
small private companies
Mm.
through the market. You have to either get access to that or pre-IPO. So
Mm.
I think it can be a great game changer. I just hope that people are able to capture information that is truly relevant and
Mm,
not just, it's a nice story
mm.
uh, because they're not really looking at capturing all of the data until now. But hopefully, with
Very
time, it
interesting.
will help a lot.
Very interesting. Thank you. And I'd love to get your thoughts on how can small or mid-sized asset managers
Mhm.
effectively implement ESG and impact frameworks.
Oh, it's very easy for them if they want to do it. The
Hmm.
problem is that most of their bosses and their senior people are cowards.
Hmm.
I was talking to a big wealth manager. He says, we're really interested in infrastructure, low carbon infrastructure. So I said, wonderful. Where do you invest? Oh, we only invest in billion dollar funds like Blackstone and BlackRock and that.
Mm,
They're not moving the needle. They're just, rolling out the same old junk. So I
mm,
think the issue is two or threefold. If you are graduating from university and you want to change the system, refuse to work for companies that don't align with your values. That's the
mm.
most important thing.
Yeah.
Not work there because you cannot change them if you go to work for the biggest wealth manager or asset
Mm,
in India, you will not change anything coming in there.
mm,
Uh, but if you refuse to work and you're come from around, you have leveraged them. So that's the most important thing. Refuse to work there. Only allocate your assets with investment managers that are serious if sustainability is relevant to
yeah.
you. If it's not, fine, you can choose anyone, but they need to feel financial pressure
Mm,
either from clients or from staff.
mm,
So the three buttons are finance, personnel, reputation.
mm,
Personnel refuse to work for them, finance refuse to give them your money. Reputation is a bit more complex.
amazing. And where do you see the most significant ESG related risks for investors in the next few years?
Um, Definitely food, climate, and also this obsession. A lot of investors keep chasing 10x.
Mm,
People forget there is 5 times more wealth than global GDP.
mm.
So there's 5 rupees chasing 1 rupee of
Yeah.
business.
Yeah.
And that money, even though they have billions, has to grow even more.
Mm,
So they keep chasing things that are really not, that might create a 10x return. Climate change, food security, education, and everyone thinks, oh, we just need to invest in tech. There's going to be 1 billion youth unemployment. Do you
mm,
think they're all going to get a job by teaching them coding?
mhm.
The largest employer in the world is small scale agriculture
Yeah.
with 1.4 billion. But very little investment money goes into that space because
Mm,
it's not sexy and there's no 10x. They want to get rid of the farmers. The second largest employer is hospitality. But
mm,
those two sectors doesn't get all of the hype and the attention, but it's very critical, unless there's this mass starvation and everybody dies, and
mm,
then you can start again. So I think climate, food security, education, job, healthcare, these are areas, public transport infrastructure, EV investment in cars is a ridiculous, terrible investment because
mm.
of the climate impact for a car that's parked 90% of the day.
Yeah.
Get use public transport is a much safer investment, and they're all AA rated.
Correct.
So the risks of not looking at everything will be significant.
Mm.
But it's education.
Amazing. Amazing. Time for three more questions for you.
Sure.
How can we create stronger accountability mechanisms for ESG outcomes in both public and private sectors?
I think naming and shaming is a very effective way.
Okay.
I don't think government, I mean, if government did their job and they said either one of two ways. One, all products have to reflect their true cost,
Hmm.
everything will fall into place. An airline ticket will go up a lot, and bicycles will go down a lot, things that are more carbon benign. That would help dramatically. There's one initiative in Switzerland, which I found quite fascinating, the idea of charging a kind of a tariff or a tax on everything that produces CO2. If you're an
Mm,
importer of products carbon intensive, you have to pay a lot. If you manufacture things that are carbon, you have to pay a lot. But
mm,
that money doesn't go to the government. It's a
mm,
fascinating idea. That money would be divided among all the people in the country.
mm.
Meaning, if you're a carbon intensive billionaire and you have lots of private planes, you pay a lot of money,
Yeah,
but you get the same amount of money as a poor person back from the government. So that's a
right.
way of incentivizing people to be less carbon intensive.
Mm,
As long as products and services do not reflect their true cost,
mm,
it will always be a challenge, but politicians want to get reelected. If I say to you, vote for me, by the way, it's going to cost you three times as much to go with an airplane from
mm,
Calcutta to
mm,
Sikkim
mm.
and vote for me, it's a tough sell, and
Yeah,
that's the real challenge. There is
amazing.
not great leadership on the climate. It's a simple idea. People know what the solutions are, but
Mm.
it's going to cost somebody.
Correct, correct. Well said. Do you see blended finance as the future of sustainable development funding?
It's a part. I mean, it's a lot of investors are very, very risk averse, and they'll throw trillions at collateralized debt obligation and then lose lots of money. But if it has something to do with impact and might have a 3 or 4 or 5 or 6% return, and they want 30% return, and they want lower risk, then they need that hybrid approach
Mm,
that somebody has to give them some kind of coverage or guarantees on their investment.
mm,
I think I'm hoping that with the massive transition of wealth from the patriarchs to their children, and that they're all really keen on this. I just think that we need to get away from this obsession
mm,
that 20%, 30% absurd returns has to be the norm because there are lots of things that give you a steady income return that you might need that don't give you that return but are much safer and do help restore the social and environmental balance. I'm not that excited about this idea. I think it's just another way of trying to get people on board. But unfortunately, there's still a lot of people that keep chasing unicorns rather than, even though they say, I'm a very impactful investor. No, where did you invest? I always look under the kimono. Where'd you put your money?
yeah, yeah. And my last question for you, Robert. What are your hopes for the next generation of ESG and impact investing leaders? You must be meeting a lot of young people who come out with much greater idealism.
Yes and no. I mean, I don't know if you have children, but everybody has challenges trying to get their children to clean their room.
Yeah.
So
Hmm.
what people say and what they actually do, I think the verdict is out. I hear lots and lots of they're very keen and all kinds of networks of these next gen. But I look at actually what they do, and until now, it reminds me very much of the high school dance. I
Hmm.
don't know if it was the same in India. During
Hmm.
the high school dance, boys would come on one side of the room, girls on the other, and nobody moved. Everyone was waiting for the other one. So a
Hmm.
lot of these next gen, they join these organizations and they only invest if one of the other people in the
Yeah.
group invested, but they're
Hmm.
all waiting for the other person to invest.
Hmm.
So in theory, yes, I think there's a lot of interest in that. And there are some exceptions like Lucas Walton, who's committed billions
Hmm.
to this. I am optimistic that they will see that they can actually use their money and restore the social environmental balance either as philanthropy or as investment. But it does remain an educational issue because they get little new information through. It's very, if you call up any of these extremely wealthy people,
Hmm.
you don't get through there. So it's continue the challenges. How do we get through and educate? That's really our work, is just trying to change the financial system so it
Hmm.
works for all stakeholders. But I am
Yeah.
optimistic long term. I'm pessimistic short term.
Optimistic long term, pessimistic short term. And on that note, Robert, I just want to say thank you so much for this amazing conversation. I mean, for my viewers and listeners, was truly an ESG and an impact investing 101. I think you gave us some amazing thoughts. I learned many, many new things from you today. Thank you for speaking to me and good luck to you.
Thank you so much for the time. I appreciate this.
Thank you. Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.